Now, a lot of us, okay, when we first see an order flow chart, we focus, okay, on this candle. We focus, okay, on this color of this candle, and our minds are actually, okay, programmed, okay, to just look at what this color is. But this color, we have to, okay, just put it aside, okay, for some time and try to understand, okay, why sometimes, okay, this color is red and why sometimes, okay, this color is green, or what really happened, okay, between the high and the low over here. So what we are doing is, in order flow, is we are adding data to a chart. We are adding information to a chart, and we are trying to find out what happened, okay, between the high and the low of the bar, or what happened, okay, between the open and the close of the bar, right? Now, the color of this candle is dependent on the open and the close, right? So if the close of the bar, this is the close. If the close of the bar is lower than the open, the color of the candle is red. Or if the close of the bar, of this particular bar, is higher than the open, the color of the candle is green, right? In order flow, what we do is, like, okay, we don't pay attention, okay, to the information in the color of the candle. What we do is we try to find out, okay, what has happened, okay, between this buying and the selling. Now, this candle has closed over here at 11:15. Why did it close over here? Because, okay, it met, okay, a little bit of serious buying over here. Took it from the lows of 51,219 and placed it right here, okay, around this 51,275, 280 mark, right? The same thing over here. This color became red because there is a 314 lot seller which came in exactly at 51,412 and pushed this from the high to this close. So what you are seeing is, you are actually getting a little bit more information than the open, high, low, and close of the bar. And you're seeing, okay, in this important points, okay, where the seller is operating and where the buyer is operating. When I was doing my order flow training, I was told that think of these initiative candles as somebody, okay, who's at the airport, who does not have a ticket, but goes, okay, to one of those counters, okay, like your Indigo counter or a Vistara counter, and tells them, okay, I'm willing to pay you the price, just get me a seat onto this flight because I have to go from Pune to Delhi, and just give me a place anywhere, okay, I'm willing to pay whatever price it is. That is a market order for you. Now, why does this person do it? Because, okay, he's got an agenda in Delhi. He wants to fly, okay, from Pune to Delhi for a conference, for some reason, for a family thing, for whatever he's doing it. But he's got an agenda, he's got a plan, right? The casual trader is not going to go and walk, okay, into Indigo counter at the airport and say, give me a ticket at whatever price. If he has a plan, okay, to go Delhi, he'll book 25 days in advance. And then, okay, he's going to go. But the man in a hurry is going to pay, okay, whatever price, okay, is to be paid to get onto that seat. And that is the definition of a market order. They pay whatever price is needed to pay because, okay, they realize, okay, that this market, okay, is short and wants to go down. So they are in a hurry to go down. And all these sellers, they entered, okay, around this 25,700. In fact, they got a second chance to enter again at 25,700, and the market dropped 700 points lower to about 25,000 and even below.
Good evening, guys. Good evening, everyone. A quick sound check. I hope I'm coming across. So great. We are done with the April series. So let's have a quick look at what the auction did uh, and what importance we got from the market profile uh, way. So the April series in Nifty futures started with a failed auction on 26th of March. We had spoken about it. Shai had posted on X. 23915 was that failed auction when we started this new series. So from then onwards, we got a move lower. That failed auction was not visited in the T plus 5 days, which we have the timeline for a failed auction. We have that as 5 sessions. So we did not get above that even one by 1 point, and we traded lower. We hit the 180R and the 280R targets. So that was a thing of the past. That was almost a month old. But we got another failed auction in the April series last week, and this was on 16th. So we have the profile chart on the left and the order flow, 30-minute order flow on the right. So how do we trade a failed auction, and what is the bias we need to adopt after a failed auction is confirmed? You can see how on the 16th we made an attempt to probe lower in the D period, but it got rejected. In the order flow, we can very clearly see that there is no supply coming in. We got greens, the cot was green, and we left an RB bar. So once we leave an RB bar and the FA gets confirmed at the close of the day, the failed auction becomes our swing point. So above the failed auction, we are bullish. Below the failed auction, we are bearish. So that is the bias we adopt after a failed auction gets confirmed. And the failed auction is time bound in the sense that it is valid. The move away from a failed auction is valid for 5 days. That's the reason we look for a revisit after T plus 5 days. But for the first 5 days, we are looking for a move away. And how do we get that confirmation, and how do we trade this? So what we need to look for on the order flow is IB bars, because we are above the failed auction. So on 17th, if you see, we made a probe lower after opening, but we stopped right at this 23330. So the failed auction was getting defended, but we did not get any IB 30 bars in the first 2 hours. So the bias was to the bullish side with a stop loss below the failed auction. You can give a 20-point filter in case of Nifty and a 50-point filter in case of Bank Nifty when you're looking at failed auction on the intraday basis, because failed auction is not a shorter term reference but a 5-day reference. So we can give little bit of leeway when we are looking at the levels. So because we were above the failed auction, we are looking at IBs. So on shorter time frame, you could have traded the 3-minute IB bars and taken trades. But on the 30 minutes, we got the first IB bar at 11:15 on 17th, the next day after the failed auction got confirmed. So how do you trade that? The rules of IB we have been mentioning here many times. I'll just go through them again. Now this 11:15 bar is a big long IB. When you get this kind of an IB bar, you can have multiple references in this IB. Generally, the rule when you get an IB30 is above the IB30, it gets activated. Once the auction gets volumes above the IB30, we look to go long, and the stop loss would be the low of the IB bar. So in this case, 23615, when the auction went about 23615 and was showing us volumes, this was a long trade with the stop loss being at the lows of this 23453. So this is still a good signal, a good trade, and accordingly you will look to book at the first target. What will be the first target if you take the entire 30-minute bar, which has got a 160 point range? Your first target would have been 23779. So when you get this kind of a bar, what we can do is we can split it out. And what we can do when you're getting such a big green bar, you can have the stop loss to this POC of that green bar or the VWAP. The So these two also become an important reference point. And you can see how these were not tagged in the next few bars. So what you do, you can have these things and get on to the objective part of that way. So in case you take the VWAP as your stop loss, which is at 23535, your first target for trading the activation of that IB30 would have been 23730. So accordingly, you will look to book profits and trail to cost. So, and if you would have taken this 23500, your target would have been 23696. So once this IB30 is formed, you go long and you hold on for your target one to get hit. At the target one, you will book profit, and what you will do is you will trail rest to cost. Here you can see how this next green bar has got the POC at 23610. So this is almost very close to the entry point. So this is the POC of a 30-minute bar. So it holds an important reference. So this 23610 can become our TSL once you have booked profit. And then what happened? We hit the first target as per the original IB range also. And then you got another IB30 bar. So here what we can do is we can either trail to the lows of this or the POC of this IB30. So because yeah, just like in failed auction, we have a time bound target which is 5 sessions. The IB bars also have a time frame. We have the rule of 10 which applies to the signals which we are taking. So depending on what time frame one is trading, if you're looking at a 3-minute initiative buying signal and trading, that is valid for 30 minutes. And if you're looking at the 30 minutes and trading, that is valid for 10 bars. So that is 300 minutes. So we will not want to hold a 30-minute signal for a longer time than 10 bars. Yes, in between we'll always look to book profits and come out risk free if it is hitting the first target. So in this case, once we hit the target, we will trail it to cost, and you have nothing to do but just hold on and watch, because as per the FA, you have 5 sessions which you can hold that long position. Yes, if you get a opposite IS30 bar, you will want to book out, or if you're getting a signal that the longs are booking out, or you're getting RS bars on 30 minutes, then it is time for you to book out. But till then, you can just hold on to the swing trades, because failed auction gives you swing references, and that swing reference will be valid for a good range. So once you get this and it is confirmed by multiple IB30 signals, there is no point in coming out of the trade sooner, and you have nothing to lose. You book profit and then trail rest to cost. So this is a risk free trade you are carrying, which carries forward to the next day. So interesting development what happened on 17th is, for the first time, we went on to close above the rollover point. Just like the failed auction, we give lot of importance to the rollover point, and the rollover point for the April series was at 23,800. So this was the first day in the April series that we closed above that rollover point. So just like we have the bias for the FA, above the FA we are bullish, below the FA we are bearish. The same bias holds for the rollover point also. So above the rollover point, we will look for more upside. Below it, we want to look for a probe lower, and we will look for supplementing signals in the order flow. So here when we closed above the rollover point, so you will take this POC of the IB bar 23740 as your reference, and the monthly structure was that of a neutral extreme. So you will want to hold longs for the rest of the series, the expiry which was today, with this as your stop loss, and you just monitor if you are getting any fresh signal in the forthcoming sessions. So after that, what we did, we formed this big A period buying tail on this Monday. There was no IB30 bar, but this A period bar was a good, nice green bar, which closed at the highs with the VWAP and the POC in the middle and the lower part. So this 23915 was one important reference for the April series. This was the failed auction which we marked on 26th of March. So just like the change of polarity was seen at the rollover point at 23,800, the similar kind of thing was seen at the failed auction point. So once the failed auction is taken out and you're getting a good signal in the order flow that now the tide has turned, this can become your good reference. So from that 23,740 which we saw previously, after this A period was done, we could take this 23917 as the trailing stop loss for swing longs, and then we just hold on and watch if we are getting any more IB signals. All these 30-minute bars are green bars, so there is no signal that we need to be wary about the trend reversing. Yes, you have you are seeing profit booking coming in, which is but natural after Nifty has ran up such a long time. So here on 22nd, there was an interesting development which happened. We swiped lower at the open, and this lower open took support right at the previous day's VWAP. In the previous day's VWAP, we had a nice A period buying tail. So that was a signal saying, telling that the buyers are coming in at lower levels and the supply is missing. So this kind of a confirmation is good enough. Although this is not a signal to take a fresh long position. We have not got any IB30 here. But if you're holding swing longs, you can note that this VWAP of the new week which is started is holding. There is no supply here. So you can immediately get back your trailing stop loss to this 2470. So this is how you will look to see what the order flow is telling. Even when we are not getting IB or IS signals, we can always trail any positional trade which we have taken by the confirmation which we get in the order flow. So this was a very narrow range day, and then again we gapped higher, and the gap higher was met with selling. This was nothing but profit booking because we did not get any IS bar. And then what we saw was we made couple of range extensions lower in the C and D. This is yesterday's chart. And in this probe lower, we saw big green cut. In fact, the entire drop was on green cut. And this 1045 bar was a RB, responsive buying pattern. So this is similar to what we saw on the day we got the failed auction. Remember, we made that extension in the D period and we got an RB signal and we got greens. The same thing happened here. So what is this telling us? This is telling us that the supply is missing or the buyers are more aggressive than the sellers in this zone. So immediately after this, we got this IB30 bar. So if you're not in a long side trade, this IB30 gets activated above this 24260 and your stop loss would be this 24180 because this is a normal 30-minute range bar, unlike the one which we saw on 17th, which was a very long, very big one. This can be traded as per the levels. So you go long about 24260, your stop loss is 2418182, and your first target would be 24338. So you hold on to the objective as long as your stop loss is not hit. You're the complemented by 3 more IB bars. So here you have got IB30 bars yesterday, 4 in one day, which is very rare. But your original entry would be this, and your stop loss would be this 24182. And then because all these 3 IB bars are overlapping, and you will just look for the target which is at 24338. And yesterday we could not hit the target. We saw the POC shifting to the top, but today at the open we hit the target. And once you are hitting a target of the IB30, you will trail your stop loss to the cost, which is 24259, which is also complementing with this VWAP of the second IB bar and lows of this last IB30. So this is a safe level to exit your existing remaining positions if you are long after booking profits. And today's order flow was very clear. There was hardly any volumes at these new highs. Today was an expiry day, so it was understandable that the longs who had piled on from last week were more interested in booking profits, and that is what happened. We went on to stay below VWAP. The C side made the typical contra move, giving this pullback high, but then again you got zeros on the buy side. And your trailing, once your trailing stop loss gets hit, then you will look for a fresh signal on the 30-minute time frame. That trade is over, done with, and you are waiting for a fresh signal. So that did not happen. We continued to remain below VWAP most of the day, and it was a very narrow range settlement day, which is understandable because of the weightage of option players we have. So that is what happened in Nifty futures. What we have done today is closed as a long liquidation B-shaped profile. So all this is for the April series. So the points to be noted when we are looking to trade series wise, the first point would be the rollover point, and then would be the failed auction whenever you get. These are longer term references, and you will make use of them entire series. Just like how we were using 23915 as our supply point for the first half of the April series. From last week, we had that 23279 as our reference. And same thing with the rollover point. Above the rollover point, we are bullish. Below it, we are bearish. So now going forward for the May series, as already mentioned in the text, the rollover point for the I'll just quickly move on to the May order flow. And let's see where the rollover point of this series is. So this is a peculiar month where we still have one more week of trading left as far as the calendar month goes, because the next Wednesday is when the calendar month of April gets over. So this next 4-5 sessions, the series would be a new one, but the calendar month will be the same. So we will have to wait till Wednesday, the 30th of April, for to have that other monthly references which we take carry forward for the new month. So we will definitely put up those references as of today in the reports which we publish daily. But the rollover point will not change, because the rollover point would be at this 24378, which is where the highest volumes came in the closing 15 minutes. And it is also coinciding with the POC. You can see how we had huge volumes at that level, even in this 115 bar, and that replicated into the close also. So this would be our rollover point for the May series. So mark this, note this down on, and make sure you have this reference marked on your charts and the journals. So above this, we would be bullish for the series of May. Below this, we will look for downside. Other references like the monthly series, VWAP and the POC, we will get them published in the daily report once the end of the day charts are uh, up. So this is as far as the Nifty futures is concerned. Let us now have a quick look at what we saw in Bank Nifty futures, and what was the trade we could take in Bank Nifty, and how do we same thing in order flow. We only are looking at the order flow chart of Bank Nifty, and from the time Nifty got that failed auction was where Bank Nifty, it was the same week Bank Nifty opened above the rollover point of the uh, April series. 51880 was the rollover point, and you can see how on 15th of April, 15th of April was the day where we opened higher. It was a gap up open, and both in spot as well as futures, we opened above the rollover point. So I was explaining you how we use the rollover point as a swing reference, and how we are bullish above the rollover point and bearish below the rollover point. So the same in Bank Nifty for the first part of the April series, we were below the rollover point, but on 15th, it was the first day Bank Nifty was leading, and that was seen on 15th itself. In Nifty, we got the failed auction confirmation on 16th, and from 17th onward, we were bullish. 17th was when we got the IB30. And in Bank Nifty, you can see how very clearly we have got this good A period buying tail above the rollover point. So here very clearly the Bank Nifty PLR has changed to the upside. And then you will just need to wait for the IB30 signal to come to trail your longs, to get a fresh higher level to hold on to longs. Till then, what would be your how do you trail your longs? If in case you're long, you'll have this POC of the A period, which would be an important reference. Then you will have the VWAP of the day, which has to be defended. And this VWAP will have to be defended not just intraday, but this VWAP becomes important for the following sessions also. Why? Because this VWAP, you have an initiative buying tail on the day. So that means the buyer have entered, and the buyer will defend this VWAP. If this is not defended, then that means the buyer who caused this AP rate tail are no longer in the auction. So on 15th, when it was above the rollover point, it was a bullish close. Yes, we did not get any signals on the 30 minutes, but on shorter time frame we did get IBs, and because we were above VWAP all day, we were getting multiple trade opportunities. So on the 30-minute order flow, then 16th again we opened higher. We again left an AP rate buying tail. So that you can see why we give lot of importance to the AP rate VWAP and the POC, because AP rate is the time where you get the highest volumes in the day, and whatever institutions need to enter positions, most of the time it is done at the open. So when you get a strong open, which is what we got on 16th, you have this VWAP and the POC as your support. And you can see how this dip in the D period took support right above this POC. It did test this VWAP, but it was not able to get any supply. So immediately you know this becomes your fresh uh, reference for support. PLR is path of least resistance, where you know what your bias has to be and which kind of trades you need to see. When you're getting a AP rate buying tail, the PLR would be to the upside, the path of least resistance. That means that buyer is driving the auction, so you look for more upside. So here again, what we did, we left this big extension handle in the 145 bar. Till here we did not get any IB30 signal in MACD, and into the close on 16th we got this IB30, which was not triggered, which was not activated, because this was in the last 15 minutes. So next day at the open, you can see how we have got zeros at the POC of previous IS. We are above the POC closing POC, and we are getting big good volumes above this IB30. So you go long above this, your stop loss would be this low of 53040. Then what you do, you will book profit at the first target, and then you will take your reference to the cost. Or in this case, what you can do, you can again see how the first bar of 17th, the A period, has been a good green bar with the POC and the VWAP right in the middle. So you can take this POC as your aggressive trailing stop loss. You will definitely book profit at your first target because that has got hit. If you want to hold swing longs, this is your fresh reference. So 53230 becomes your reference, and you will wait for more signals. This IB signal is valid for 10 bars. So till 10 bars, you can see how much of up move you can get, and you can keep trailing your stop, because this is a risk-free trade. And you can see how this green bar, because you have made a range extension higher. In market profile, range extension means the buyers are in firmly in control. So you can have this as your fresh reference. So you just keep on trailing as long as you are getting good green bars. And here at the close of 17th, this POC of the uh, H green bar would be your trailing stop loss or your reference. So we went on to see the POC closing to the shifting to the top at the close. So this 53960 was our swing reference to hold on to long positions. What happened on 21st? We opened higher. Same thing. Again, we left a big long A period buying tail. So when you're getting an A period buying tail, you can have the POC as your reference, or you can have this VWAP, which is much higher. So if you are very conservative and you want to hold on to the profits and not want to give much back to the market, aggressive stop loss would be this 54960. Or if you want to give it little more space, this 54666 would be your trailing stop loss. We held both of this all day. We remained above VWAP, which is telling you that the PLR is still to the upside. And then the dip which we made in the afternoon took support at this POC level. So all this in order flow is telling us that this is still in buyer's control. At no point of time we have got any IS30 signal. No point of time we have broken below VWAP of the day. And this same continues on 22nd. Although it was not a gap up, we left another A period buying tail. And then again, this POC becomes your trailing stop loss. And then you hold on to your longs. And here you can see you've got this RS bar at 55900 with zeros on the buy side. This is where you will get little uh, skeptical that it is good time that you lock into your profits or at least trail your stop loss even more near closer, because we have come up a long way and here we are nearing the series close. So it is very obvious that the longs would want to book profit, especially when so early in the day the POC is also shifted to the top. So if not, the VWAP would be the reference and this POC would be the reference. But that held. So even if you have held on to longs, because this yesterday 22nd was the first time in the last week, 10 days, last 7-8 sessions where Bank Nifty broke below VWAP. So even the close on that day was below VWAP, although the 8 period TPO was still POC was still holding, but this was telling us that the longs are booking profits. And then what happened yesterday at the open was very clear. The higher open did not get any demand. The POC was at the top and we made a big open rejection reverse chart. We just swiped through previous days range and value. It was a P-shaped profile. So we had a nice value area, nice balance. So we swiped through that and you can see how the 8 period how this has changed. The scenario has completely changed, and here when you get this kind of a period, it is completely in contrast with the A period we were seeing so far. It is completely red, closed around the lows, broken VWAP, and the POC and the VWAP are on the middle and the upside. And the second the B period, you can see how it got rejected at the VWAP and it has lifted a period selling tail. So for the first time in 2 weeks, we saw this A period selling tail yesterday. So it is very clear that the longs are out from Bank Nifty. Hence, we went on to make this two range extensions lower, but we took support right at the VWAP of Monday, which was at 55152. So that was holding. So we just uh, felt that we could get some buyers back, but yesterday was a very narrow range day where we did not get any IBs and we remained below VWAP. In fact, we had an extension handle at this 55524, which was our reference. We were not able to tag that. And today at the open, we went above that, but you can see how, again, same thing what we saw yesterday, zeros on the buy side and no volumes. So while probing higher, when there are no volumes, it is very clearly telling that the buyers are not there. So it is but obvious that the auction will go in the opposite direction. So that is what it did. Although it remained in this A period range for most of the day, the PLR for Bank Nifty, considering yesterday's and today's order flow, was to the downside. And that is what happened after this coiling. We saw that big move, big swipe coming in the L period. And I've already put it up on X how we were anticipating this at VMR and we were ready for this. And just before time, we even sounded that in the room that there's a possibility of Bank Nifty swiping lower, and we even had a, objective in the 56,000 uh, put, which went from 645 to 873 in I think just 15 minutes. So this was how we need to take the order flow and the good market profile references, and this is what we do at VMR. We have all these concepts and these setups which we make use of, because trading is not an easy game. We need to be sure, we need to make use of the best of the features which you have. You need to have the edge. So the edge is only when you can combine some sharp and important aspects. So for us, we have the market profile, we have the IB signals on 30 minutes, we have the failed auction, we have the rollover point, and which is what we look at and uh, take some good trades together. So that is it for today. We will definitely put up all the new references for the series of May in the post, which will come up later. And we'll have the rollover points also marked along with the monthly VWAP and the POC. And then we'll as the new series gets in volumes, we will look to develop them and come back with another session on Monday with the latest references. So that is it for today from my side, guys. Thank you for joining in and hope these sessions are helpful. We have lot of these concepts and clarity based trades which we take at the VMR. So if anyone of you is interested in joining, do DM me on X. My ID is open, or you can even get in touch with us via email or through our website. So thank you for joining in. Have a great evening, and we'll come back with the latest May series references back on Monday. Signing off for now, and have a great week.